no shortage of excitement as we continue to cover metals and mining around the world. My name's Adrian Pocobelli. Welcome to the Northern Miner Podcast, Global Mining News. I say to myself, as I look at all the headlines here, we start with Guinea, and we move across the continent of Africa. We end up with China and the United States, and of course, Korea zinc. Very interesting small update there. And of course, truly global, we are under the sea. We have Gerard Barron, CEO of the metals company, returning to the show after 5 years. So a pretty exciting interview. Of course, deep sea mining, one of the great themes of the 2025 mining news narrative. And of course, we saw the executive order coming from the White House. We're seeing TMC, or the metals company, in many news articles, including the FT, CNBC. So it's a great interview, and I feel like we come to a deeper understanding of where the metals company is coming from. We also have Dan Wilton, CEO of First Mining Gold, on this week's Spotlight. So let's get into it. There is a ton going on here. So Guinea has the Simandou project, which a lot of you will have heard of. As it says in the Cecilia Jamasmi article, it is poised to become the world's largest mine for high-grade iron ore. Of course, Rio Tinto is involved in that, and it's been a big deal, this mine. I've been hearing about it really since I started working at the Northern Miner in 2012. So it's a major project. Again, poised to become the world's largest iron ore project. And again, Rio Tinto, of course, is involved, as well as China, as well as the government of Guinea, which perhaps gives some reassurance to Rio Tinto and its Chinese partners, because we got this story from Reuters on May 15th via mining.com. Guinea revokes 46 mining licenses, signaling stricter oversight of major operators. So that has to turn some heads in Australia. And hello to all our Australian listeners. Guinea has revoked the licenses of 46 mining companies operating in the country, a government source told Reuters on Thursday, while another said it would be up to 53 permits in what some analysts see as a warning shot to larger operators in the world's second largest bauxite producer. The move comes amid growing resource nationalism in the military-ruled country and across Niger, Mali, and Burkina Faso, where authorities have tightened controls over their vast mineral wealth since military coups in 2020. Now, Guinea is not considered part of the Sahel. I asked ChatGPT, but it is part of West Africa, and it has a deep water port that they are building. Actually, as a result of this project, it's considered, I have this old article here, it's considered the world's biggest mining project. Just to give you some context here, we have this older story from the Financial Times, world's biggest mining project to start after 27 years of setbacks and scandals. And so part of this deal is a railway from this project to a deep water port that they're building. So they're building the railway, they're building a deep water port. Now, those who are being affected by this revoking of mining licenses are considered smaller. As it says here, in our Reuters article we started with, the affected licenses cover bauxite, gold, diamond, and graphite operations, but industry sources says none of the companies is a significant producer in Guinea's mining sector, which is dominated by major international firms. Quote, these are just small underperforming licenses, end quote, said one mining analyst familiar with the situation who requested anonymity due to the sensitive nature of the issue. Quote, impact on the market should be negligible. End quote. So this analyst is playing it down. It continues, Guinea holds the world's largest bauxite reserves, the main ore used to produce aluminum, and is a significant source of gold and iron ore. The government did not immediately respond to requests for comment on the specific reasons for revoking the licenses or whether large mining operations might face similar actions in the future. A second source in the Mines Ministry said, quote, we've been working for some time on cleaning up the land registry. We can say that this falls within the same framework, end quote. So also playing it down, one analyst said major bauxite producers in the West African nation are on track to mine more than 200 million tons this year, a 35% increase from last year's record production. Quote, these producers remain unaffected by the license revocations, end quote, the analyst added based on production estimates from the major producers. Although license revocation is consistent with regulation, Quote, "It can be interpreted as a warning to mining companies that the government intends to see projects being developed according to the agreed terms," end quote, an advisor at a Pan-African consultancy firm said, also asking not to be named. So that rings a little truer to me. We had a story also from Reuters the following day, via mining.com, May 16th, which was Friday. Guinea repossessed 51 mining licenses, information minister says. Guinea's military government has taken back 51 mining licenses as it steps up efforts to repossess claims or concessions where operations have either not been launched or where it says permits are being underutilized, its information minister said. Reuters first reported that the government planned to cancel the licenses on Thursday. That was the article we just looked at. Famasuma announced in a televised address late Thursday night that Guinea's military ruler, Mamadi Doumbouya, had signed the repossession decree, which covers bauxite, gold, diamond, graphite, and iron concessions. The concessions had been, quote, returned free of charge to the state, end quote, Suma said, citing multiple articles in Guinea's mining code as legal justification for the license withdrawals. Guinea is home to the world's largest reserves of bauxite, the main ore used to produce aluminum, and its exports are crucial to global production of the industrial metal, particularly in China and Russia. It had previously moved to withdraw bauxite licenses belonging to Kibo Energy SA and Emirates Global Aluminum. And we have a quote from Tom Price, investment bank Panmure Liberum's head of commodities. Quote, government pressure on Guinea's bauxite industry is building. We suspect Guinea's government is consolidating the number of foreign bauxite miners and forcing the reformed industry to invest in local downstream processing capacity, end quote, he added. This also rings true. Rather than being a simple cleanup, it simultaneously does seem to be a bit of a warning shot to, stick to your promises, and if we want local processing, you might want to do it. It continues. However, another analyst familiar with Guinea's mining sector operations who asked not to be named said the companies affected by the decree were inconsequential players. Guinean authorities did not respond to requests for comment on their planned next steps. The decree affects mining operations with licenses granted between 2005 and 2023. Some of the permits had already expired, while others would have still remained valid for decades. So, quite interesting there. Now, we do have a coincidence as well, which is a story that came out earlier in the week on the Monday. Rio Tinto to ship Simandou ore in November. And this is by Cecilia Jamasmi at mining.com. Rio Tinto expects to ship its first iron ore from the Simandou project in Guinea this November. Gerard Reinberger, the company's managing director for Simandou, announced Monday. Located in the country's southeast, Simandou is poised to become the world's largest mine for high-grade iron ore, a critical input in low-carbon steelmaking. Once operational, the site is expected to produce 120 million tons of iron ore annually. The project is predominantly backed by Chinese firms, which control 75% of its output. Rio Tinto, the world's largest iron ore producer, holds the remaining 25%. The deposit is split into 4 blocks. Rio Tinto Simfer, a joint venture between Rio Tinto, Chalco Iron Ore Holdings, and the government of Guinea, is developing blocks 3 and 4 in the south. The northern blocks are managed by a consortium, including Singapore-based Winning International Group, China Hongqiao Group's Weiqiao Aluminum, and United Mining Suppliers. You don't want to come to too many conclusions here, but we can say interesting timing, as news comes out that Rio Tinto is getting ready to ship from Simandou in November. Now, going into the Sahel, not too far away, we have an update on Orano in Niger. Orano explores sale of Niger uranium assets, FT reports, and this is a story by Reuters via mining.com. French state-owned nuclear fuel company Orano is exploring the sale of its uranium assets in Niger after the breakdown of its relationship with the West African country's military rulers, the Financial Times reported on Saturday, citing people familiar with the matter. The uranium miner said on Tuesday that it had filed a lawsuit with the Niger courts over the, quote, arbitrary arrest, illegal detention, and unjust confiscation of property, end quote, involving its staff and assets in the country. So we saw this in Mali with Barrick Mining and the 4 employees who are still being held by the government there. And now there is an Orano employee who is being held in Niger. The article continues. Orano said it had been unable to contact its mining director in Niger, Ibrahim Kurmo, who was taken to the headquarters of the country's external intelligence agency, the General Directorate of External Documentation and Surveillance, sources told Reuters earlier this month. The company also had a mining permit for its subsidiary Umuraren stripped in June 2024. In a statement to Reuters, Orano said its priority remained the ongoing international arbitration process, adding that, quote, several parties have expressed their interest in the mining assets of the group in Niger and are at liberty to submit offers if they wish to, end quote. So Orano looking to get out of Niger. Another interesting development. So remember last week, we had that article from the Tehran Times about how Niger and Iran were discussing trade deals involving minerals. We got kind of a similar themed story, this time from the Associated Press. Taliban and Burkina Faso ambassadors pledged new trade and mining cooperation. So first we have Niger and Iran, then we have Afghanistan and Burkina Faso meeting in Iran. Let's see what it says here. This is the Associated Press reporting out of Senegal. The Taliban's acting ambassador to Iran has met with his Burkina Faso counterpart in the Iranian capital Tehran as part of a broader outreach effort by the West African country to win new trade partners, according to Taliban-controlled media. During the meeting between acting ambassador Maulvi Fazl Mohammed Haqqani and Ambassador Mohammed Kabura, both parties pledged to cooperate on trade, mining, and vocational training. The Taliban are the de facto rulers of Afghanistan. And we have a quote from the Afghan embassy in Tehran, who said in a statement, quote, in this meeting, the parties emphasized the expansion of cooperation in the fields of trade, agriculture, mining, and the exchange of professional and vocational skills, end quote. Both ambassadors also pledged Monday to have private sector delegations visit soon as part of the plan to develop trade between Afghanistan and Burkina Faso. And as it says in this AP article, the meeting comes less than a week after the Commander General of Iranian law enforcement and security forces visited neighboring Niger and announced new areas of cooperation and training for the Niger Police and National Guard, including training at the Iranian Police University. Quote, the meeting culminated in the signing of a memorandum of understanding covering several areas of cooperation between the two countries, end quote, according to a statement from Niger's Minister of the Interior, Brigadier General Mohamed Toumba, to media outlets. Finally, Ulf Lacing, head of the Sahel program at the Konrad Adenauer Foundation in Bamako, told the Associated Press that Burkina Faso and the Alliance of Sahel States, known by its French acronym AES, have been searching for alternative partners since their respective military juntas took power. They wish to, quote, rely less on Western companies and focus more on their so-called new partners, end quote. He continues, quote, Iran has been trying to boost cooperation with the Sahel AES countries. They also have been active in Burkina Faso, sending even some aid. A shipment arrived at Ouagadougou airport, end quote. So, interesting developments there also in the Sahel. We have an update on Barrick. And this is Reuters via mining.com. Mali hearing on Barrick's Loulo-Gounkoto mines postponed to May 22nd. And this came out May 15th. A Malian court hearing scheduled for Thursday on whether to put Barrick Mining's Loulo-Gounkoto mining complex under provisional administration has been postponed to May 22nd, the president of the court said on Thursday. Barrick Mining, previously called Barrick Gold, and Mali's government have been at odds since 2023 over the implementation of a new mining code that raises taxes and gives Mali's government a greater share in the gold mines. Scrolling down, on Thursday, Bamako's Tribunal de Commerce Court was due to consider a request by the Malian state, which holds a 20% stake in the Loulo-Gounkoto mining complex, to put the mines under a provisional administration. The aim of the request is to restart operations at the complex, which have been suspended for months, according to a person familiar with the matter. Granting the request would represent a major escalation of the dispute between the West African state and the Canadian miner. And, it brings up George McLeod, who I am going to try and get back on the program, a geopolitical analyst with a focus on mining. To paraphrase, this is a highly complex technological endeavor. So it's not like someone can just go and press a button here. It'll be interesting to see if they can actually get this working again. We have heard talks in the past of Russia helping out countries in the Sahel with mining, and also Norgold also making inroads with these countries in the Sahel. So it's not crazy that they could actually get this running again and really appropriate this massive mine. Continuing down the continent of Africa, U.S. signs tin deal with Rwanda. The headline sounds bigger than the actual story, but it's significant nonetheless. This is Jackson Chen at the Northern Miner. The United States has established a new supply of tin, which it hasn't mined in more than 3 decades after Rwanda's Trinity Metals agreed to export its mined products. Trinity signed a letter of intent this week establishing a partnership with Pennsylvania-based Nathan Trotter, North America's largest tin alloys manufacturer. The signing was witnessed by a U.S. State Department official in its Bureau of Energy Resources. Quote, "This type of critical minerals project supports U.S. onshoring, strengthens our national security, and advances economic prosperity," end quote, the Bureau said in a post on X on Tuesday. Now, I don't want to underplay it either. I mean, there was Nathan Trotter at the Department of State who oversaw the signing ceremony, so it's not nothing either. But it's basically, it sounds like one company in Rwanda who's mining tin will be sending it to this processor in the United States. So not insignificant, but it's not necessarily a treaty either. Moving slightly west from Rwanda, and also relating to Rwanda, we have a story out of the Wall Street Journal. The U.S. is eyeing a minerals deal with Congo, included child miners. Charities are warning that without government support for the Central African country's artisanal mining sector, private investment could bring negative consequences. This is by Yusuf Khan at the Wall Street Journal. So talks continue between the U.S. and the DRC. As it says here, the U.S. and Democratic Republic of Congo are in talks over a possible minerals deal that would see the former providing security assistance to the latter in exchange for some of the country's natural resources. But charities are warning that any investment in the DRC comes with the risk of encouraging forced labor and child mining in the country. And we have a quote from David Sturms, Director of Partnerships at the FCA, which is the Fair Cobalt Alliance. Quote, "ASM, also known as artisanal small-scale mining, ASM is part of the mining fabric. Even if the U.S. only invests in industrial mining, this will attract artisanal and small-scale mining," end quote. Another huge theme that has been growing in recent years in the mining news narrative, which are these artisanal miners. We also see it in Central and South America as well. And in Africa, it is a huge deal. Continuing with the DRC, we have a story from Reuters via mining.com. Congo may impose more cobalt curbs after 4-month export ban. As it says here, the Democratic Republic of Congo may impose strict curbs on exports of cobalt when its existing 4-month export ban ends, the head of a government agency said on Wednesday. Congo, the world's leading producer of cobalt, imposed the export ban in February to try to revive prices for the metal, which is used for batteries for electric vehicles and mobile phones. Patrick Loabeya, president of the Authority for the Regulation and Control of Strategic Mineral Substances Markets, told a conference in Singapore that Congo would implement further restrictions because of high stocks in the country and elsewhere. He said the stockpiles that have depressed prices, quote, "have not yet been exhausted, although they have been significantly reduced," end quote. Interesting. The government agency's next decision will, quote, "inevitably imply a strict limitation on exports in whole or in part until market balance is reached with regard to the supply and demand of cobalt," Loabeya said. He also said the agency would consult industry players in June regarding the ban. Continuing in DRC, we have just a headline here. Ivanhoe almost doubles Makoko copper resource in the DRC. This by Frederick Temesco at the Northern Miner. Ivanhoe Mines said a new preliminary estimate for its Makoko district discoveries in the DRC shows that the resource base almost doubled from a year and a half ago. Total delineated contained copper in the area now stands at 9.37 million tons, 89% more than the 5 million ton estimate released in November 2023, Ivanhoe said Wednesday. Makoko is located within the company's Western Forelands Exploration Project. I remember when Ivanhoe was at something like 30 cents or 60 cents. As it says here, Ivanhoe rose 0.3% to $14.69 in mid-afternoon trading Wednesday in Toronto. That gave the company a market value of about $20 billion. So interesting development there. We also have Robert Friedland, who co-chairs the company, Ivanhoe Mines. He was interviewed in the Financial Times as part of a very interesting story on war, which is something that Friedland has been bringing up at conferences. As the headline here says, modern warfare is reshaping metals demand, says mining veteran. And it stands to reason. When Germany and Europe come out and say they're going to spend $800 billion or $1 trillion, whatever the number is, on military, it sounds like quite a bit of metal is going to be required here. This is Leslie Hook, Camilla Hodgson, and Sylvia Pfeiffer at the Financial Times. Veteran mining entrepreneur Robert Friedland said modern warfare and growing demand for weaponry had dramatically altered the landscape for metals demand, and that the West was unprepared for the shift. Rising defense spending and military conflicts from Ukraine to Kashmir have exposed critical shortages of traditional metals such as copper, which is essential for ammunition, and niche materials such as graphite and germanium used in advanced weapon systems. Friedland, who co-chairs Ivanhoe Mines, said Western governments had belatedly woken up to their vulnerability after decades of neglect, adding that it would, quote, change dramatically what we need to mine, end quote. He continues, quote, everyone in the American government at the highest level is completely concerned with the supply chain and critical raw materials, end quote. Friedland, a U.S.-Canadian dual citizen, said in an interview, quote, they don't have any of the metals that modern warfare requires, end quote. So I call it the meta headline, U.S. scours world for natural resources. If you had to sum up the first 6 months of the year in one headline, that's what I would go with. And final headline, just a bit of a head turner here. We've been following Korea Zinc here and there, tracking the story. It seemed to quiet down a bit. Then we got this headline out of Bloomberg, billionaire Kim barred from leaving Korea amid bond probe. Billionaire Michael Byung-ju Kim has been barred from leaving South Korea as part of a probe by local prosecutors in a bond sale by one of the private equity investors' portfolio companies. The restriction was confirmed by a spokesperson for Kim's firm, MBK Partners, after Yonhap News reported that prosecutors had on May 17th executed a search and seizure warrant on Kim and obtained his mobile phone. Yonhap cited unidentified sources in the legal industry. The travel ban is a major escalation in the case for Kim, a Korean-born, U.S.-educated financier who leads South Korea's biggest private equity firm. Now, of course, we're following Korea Zinc and the takeover battle, and MBK was involved in trying to take over the world's biggest processor of zinc, located in South Korea, so a major asset for the Western supply chain, one could argue. So just kind of an interesting side story, make of it what we will. Coming up this episode, we have Gerard Barron of the Metals Company for an extended interview. And we also have Dan Wilton, CEO and Director of First Mining Gold, for this week's Spotlight. So lots to look forward to. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. Find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Dan Wilton, CEO of First Mining Gold, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for the very first time, Dan Wilton, CEO of First Mining Gold. Dan, welcome to the show.
Adrian, thanks for having us. It's a pleasure to be here.
Well, it's great to have you. I mean, sunnier times couldn't be imagined if you have gold in your name at this time. So it's great to have you, Dan. And of course, you're working on gold projects in Canada. So lots of excitement here. So for those that are not familiar with First Mining Gold, could you tell us a little bit about the company and what you guys are working on?
Sure. So the company was founded by Keith Neumeyer, who's the CEO and founder of First Majestic Silver, but founded in 2015, originally as a bit of a mineral bank. So they went out and acquired 8 projects or companies in about 12 months and built this incredible portfolio of assets. I joined in 2019, and at that point, we really had a clear focus of advancing our largest project at the time, which was the Springpole Gold Project in Ontario. through the environmental assessment process. And in 2022, we were able to consolidate ownership of the Duparquet gold project in Quebec, which is one of the largest undeveloped gold projects in the prolific Abitibi gold belt. So, we're advancing Spring Pole towards environmental assessment decision, targeting the federal EA decision by the end of 2025. So really one of the most advanced projects in Canada from that perspective, and having some outstanding exploration success at Duparquet, demonstrating that the initial, call it 3.5 million of measured and indicated and 2.5 million ounces of inferred resource there, we think is going to continue to grow.
Well, it sounds exciting. So you have, again, Spring Pole and Duparquet. Spring Pole is in Ontario. So tell us a little bit more about these projects. What have you found? What do you think is there? You mentioned a little bit here, but is it close to infrastructure? Could you give us a few more details, in a sense, on the projects?
Yeah, so we'll start with Spring Pole, which is our most advanced project. It's located about 100 kilometers east and a little north of Red Lake, Ontario. So this is a historic mining district. Obviously, they've been mining in Red Lake since the 1930s. Spring Pole is a bit of a unique geological finding for this kind of area in, what we in Canada call a conventional Archean greenstone gold system, in that it's continuously mineralized porphyry intrusive. And what that means is that the mineralization at Spring Pole is essentially one large blob and continuously mineralized. So it's about 1 kilometer long. It's about, 150 to 350 meters wide and about 500 meters deep. As we have it defined now, we know that envelope is going to grow. But as it's sitting right now, and we've defined the resource, it's sitting mostly from us drilled to a measured and indicated resource, call it 150 million tons at about 1 gram gold and about 5 grams silver. So it is actually one of the largest silver deposits in Ontario and one of the larger deposits of the critical mineral tellurium globally, as it turns out. So that's a project that we put into the environmental assessment process in 2018, both federally and provincially. And we've done a lot of hard yards, including taking the project through economic assessments, pre-feasibility study. We're about 90% of the way through a feasibility study now, and have spent most of our time in the last 5 years really concentrated on advancing the environmental assessment process. An enormous amount of work has gone into understanding, the natural environment, understanding geochemistry, and really in an iterative fashion, working up a development plan that has incorporated a lot of comments from regulators, from indigenous communities that we've been working with, and is now, I think, at a great state to be further moved forward. So again, been going through the federal and provincial EA process at Spring Pole, and really submitted our final environmental assessment in November of last year, kind of went through a public comment period. And now we're just in the point of comment response with the regulators, going back and forth, answering questions, but targeting being through that, hopefully kind of by the middle of the year. And that would have us on track for what we're hoping is federal environmental assessment decision by the end of 2025.
Amazing. So you must be pretty excited by what you're hearing, say, from Premier Ford and even federally. I mean, I feel like it's a global political issue right now, permitting and speeding up permitting times. So I guess good news on that front. In terms of financing, do you guys have everything you need? How are you feeling in terms of where this is going?
Yeah, so Spring Pole is a big project, right? I think in our pre-feasibility study, it was scoped with an upfront capital of about $718 million US. You add some inflation onto that. That study was done in 2021. So we know there's been some pretty meaningful inflation, but some scope changes we put in that would keep that capital down. But in any event, we're looking at something that should be, let's call it, in and around $1 billion US of upfront capital. It's a substantial project for a company like ours. So I think we're well funded to get the project, to these major milestones. One of the things that's really helped us get there is this portfolio of other projects. When I said at the beginning, we started life as a bit of a mineral bank, we've been able to bring in partners on those other projects and, sell them, create royalties on these projects, sell those royalties. And working this portfolio of projects, we've turned it into now more than $75 million of cash over the last 5 years, which is hugely important when you look at, how we've been able to move the project forward and not take significant dilution for our shareholders, which doesn't really come across at first blush when people look at the fact that we have, more than 1 billion shares outstanding. You need to remember, I started in 2019. That number was already about 600 million shares. So, we've been very responsible, I think, in terms of how we've raised money and really trying to limit the dilution that we've taken. And that's one of the big values that this portfolio of other assets has given us. But the reality is you made reference to a changing kind of political will, if you will, around developing projects in Canada. I think we're very encouraged by the environment that we're in and the fact that, really, I've never seen public opinion so supportive of resource development in Canada in the 30 plus years that I've been financing resource projects. So the one thing we can point to very clearly with projects like Springpole is the ability to drive infrastructure into more remote areas, like Northwestern Ontario that we're talking about, that can bring critical infrastructure to the communities around us, whether that's building new roads or upgrading roads. It's bringing power lines up into new areas and ultimately opening up a lot of that area further north of Springpole to further exploration and potential development that development could provide, generations of opportunity for people in the north. So we think these are very significant development projects and can have a massive economic impact in the regions that we're operating in.
Okay, excellent. So in terms of the roadmap, then, you mentioned the environmental assessment. What do investors have to look forward to, say, and how do you see things playing out in the next, say, 6 months to 2 years?
That's actually a perfect time frame to talk about. In the next 6 months, I think in the next 3 or 4 months, we're going to have some concrete measures toward demonstrating, the timelines for completing the environmental assessment and hopefully getting to a decision on that, federally before the end of 2025. We've got a lot of work that comes post the environmental assessment approvals. We think that the provincial EA approvals likely come sometime, hopefully shortly after that, but we're talking probably in 2026. We'd like to be driving toward agreements with all the Indigenous communities that we're working with in that time frame as well. And it's an important part of the development is making sure that you can build and have those relationships with the communities that can give them very clear opportunities to benefit from the projects that we're moving forward. And then next year would be a feasibility study, which we would be finalizing likely in 2026. There's some follow-on permitting that could target, potentially a construction decision in 2027. So lots going on there. And that's just Springpole. I don't want to shortchange our Duparquet project where we're having very, very strong exploration results. And ultimately, with Springpole getting through the EA process, it frees up our team to start really focusing on what could be that development path at Duparquet as well, which again is one of the largest undeveloped gold projects in the middle of the Abitibi Gold Belt, one of the higher grade open pits in Canada, as we have it scoped in our preliminary economic assessment. So, we think we're a long way from being a one-trick pony here, and a lot of catalysts coming up over the course of the next, 6 to 18 months.
Okay, excellent. Sounds very exciting. And as we wrap up here, Dan, what do you want investors to know about First Mining Gold? What would you like them to take away from this conversation?
So the biggest thing is we're in a gold price environment that is very, very supportive of development of these projects. Number two, you are going to see gold producers generating record levels of free cash flow over the course of the coming quarters at these gold prices. Record levels of free cash flow. And most gold producers are starting to really scramble for opportunities to demonstrate resource growth or any new projects that could replace existing declining reserves and resources that they have. So we're coming to a point where I think the development project, and particularly development projects in tier one jurisdictions, are going to be the most sought after items in the gold mining sector. And First Mining Gold is uniquely positioned with one of the most advanced projects from an environmental assessment and permitting perspective. And then another major project following that, located in the middle of the Abitibi, which is obviously one of the most sought after gold environments in the world. So major projects that you can still today buy at around $10 an ounce, when historically these projects tend to get acquired at, $100 to $200 an ounce. So we see real long-term share price appreciation potential here at First Mining Gold.
Dan Wilton, CEO of First Mining Gold, thank you for joining us and sharing everything that you're working on at the Springpole and Du Parquet projects in Canada.
Thanks, Adrian.
And thank you once again to First Mining Gold for sponsoring this week's episode of the Northern Miner Podcast. To learn more, visit firstmininggold.com. Turning to the website, a development on the rare earth front. China issues first rare earth magnet export permits, includes Volkswagen suppliers. This is Reuters via mining.com. China has issued export permits to at least 4 rare earth magnet producers, including suppliers to Volkswagen, the German car maker, and industry sources said the first granted since Beijing restricted shipments last month, and a sign that the critical materials will continue to flow. Baotu Tianhe Magnetics, which makes the magnets used in electric and hybrid car motors, received a license for Volkswagen in late April, 3 sources said. One of the sources added that the automaker had reached out to Beijing to help during the process. Quote, "We remain in close contact with our suppliers and have received indications that a limited number of Volkswagen AG's magnet suppliers have been granted export licenses by the Chinese government." End quote, Volkswagen said in response to questions from Reuters, declining to provide further detail. Zhongke San Juan received at least 1 permit, 2 of the sources said. Baotu INST Magnetic and Earth Panda Advanced Magnetic Material were also granted at least 1 permit, one of the sources added. The sources declined to be named due to the sensitivity of the matter. The 4 magnet producers and China's Commerce Ministry did not immediately respond for requests for comments. Export licenses are granted for each customer, and it is unclear whether all clients of the 4 firms have been cleared by Beijing. One of the sources said permits were only issued to suppliers for customers in Europe and Vietnam. Interesting. However, the permits were issued before the trade war truce agreed with Washington on Monday, which industry sources said is likely to make it easier for U.S. customers to win approvals. Interesting development there. Also a landmark for Lynas Rare Earths. Lynas produces first heavy rare earths outside China. This by a staff writer at northernminer.com. Australia's Lynas Rare Earth has become the first producer of so-called heavy rare earths outside of China, following the successful production of dysprosium at its Malaysia plant. Dysprosium is a key input in the production of high-performance magnets used for powering electric vehicles and wind turbines. Due to its strategic importance, the mineral was recently placed under export restrictions by China, the leading producer of rare earths. On Friday, Perth-based Lynas confirmed that it had successfully produced the first batch of dysprosium oxides from its Lynas Malaysia refinery. The facility has been in operations in 2012, producing mainly light rare earths used in smartphones and defense applications. Quote, "The production of this on-spec dysprosium is a significant step for supply chain resilience and provides customers with the option of sourcing product from an outside China supplier," end quote, Lynas CEO and Managing Director Amanda Lacaze stated in the Friday release. Lynas's production of dysprosium, the amount of which was undisclosed, marks the first time that a company outside China has produced a heavy rare earth on a commercial level. China has dominated the world's supply of all rare earths, accounting for about 70% of the mined output and nearly all of the processing. So, interesting development there. More on the rare earth front following the visit by Donald Trump to Saudi Arabia. Saudis enter rare earths with MP Materials deal. This is also by a staff writer at northernminer.com. MP Materials has signed a deal with Saudi Arabia's state miner Ma'aden to develop a rare earth supply chain in the kingdom covering everything from mining to magnet production. The agreement, signed during the U.S. Saudi Investment Forum 2025 in Riyadh, outlines plans for cooperation across the entire value chain, from exploration and mining to separation, refining, and permanent magnet production. The deal is another step of the kingdom to accelerate its ambitions of becoming a global critical minerals hub. Quote, "This partnership is a key step in making mining the third pillar of the Saudi economy," end quote, said Ma'aden CEO Bob Wilt. MP Materials CEO James Litinsky said the deal would help, quote, "rebalance the global supply chain, particularly for robotics and physical AI," end quote, while strengthening U.S.-Saudi strategic ties. Interesting. And another rare earths headline, China's Shanghai Resources to buy Australia's Peak Rare Earths for $97 million. This is Reuters via mining.com. And Peak Rare Earths is currently developing the Ngwala project in Tanzania, host to one of the largest, highest grade, and lowest cost neodymium praseodymium deposits in the world. Sounds like they got it for almost nothing. $97 million US. Fascinating. Continuing on, tungsten prices hit 12-year high on China's limits. This is by a staff writer at northernminer.com. European tungsten prices have surged to their highest level since 2013, driven by China's tightening grip on critical mineral exports and rising demand from sectors like electronics, defense, and renewable energy. Tungsten concentrate in China has climbed 26% to about $20,400 per ton this month, from $16,200 per ton in January, according to the Shanghai Metals Market. The concentrate is 65% tungsten trioxide. So you can read the entire story on northernminer.com. Continuing on, Shanghai Exchange looks to open domestic nickel contract to foreigners this year. This is Reuters via mining.com. The Shanghai Futures Exchange is considering opening its domestic nickel futures contract to foreign investors this year, instead of launching a separate contract on its international energy exchange, two sources with knowledge of the matter said. SHFE, or the Shanghai Futures Exchange, has been exploring a more internationally accessible nickel contract since at least 2023, as part of broader plans to build its global presence and challenge the dominance of rival, the London Metal Exchange, or LME. Industry sources have said SHFE also wants to offer the market an alternative to LME nickel after a trading debacle in March 2022, when the LME contract was suspended for 8 days, leaving the industry without a global pricing benchmark for the metal used in stainless steel and electric vehicle batteries. SHFE is organizing a 2-day meeting in Shanghai on Thursday and Friday for the metals industry, where the nickel contract plans, among other topics, will be discussed. 2 other attendees, speaking on condition of anonymity, told Reuters. Much of the global metals industry is currently only a short flight away in Hong Kong, attending the LME Asia Week conference, which ends on Wednesday. So part of this ongoing move of metals pricing really moving from the west to the east. And here's just another manifestation. Another story tangentially related. Ex-LBMA exec adopts blockchain to trace gold. This is by Henry Lazenby at the Northern Miner. Sakila Mirza must turn a decade of rulemaking experience at the London Bullion Market Association into real-world systems as incoming president of New York-based traceability platform Responsible Gold. Her remit is clear. Marry hard-won policy with live systems and prove that blockchain can fulfill promises of proving real-time provenance of precious metals. Mirza spent her years as the LBMA's general counsel and deputy CEO building industry standards to provide a foundation for trust and integrity, she told the Northern Miner in an interview. Quote, "The standards that industry has developed should always be considered the baseline," end quote, she said. She continues, quote, "Garbage in, garbage out. Data integrity is the key differentiator of what makes a good platform," end quote. So another player is going to attempt to track metal using blockchain. As it says here, by establishing a verifiable chain of custody, from mine to vault, companies can demonstrate compliance with international standards, reduce reputational risk, and meet growing ESG expectations. For miners and refiners, transparent sourcing can also open access to premium markets and responsible investors. And just a couple more stories. EU must set aside over 10 billion euros for key minerals, says agency head. This is Reuters via mining.com. The European Union needs to create funds of more than 10 billion euros to spur investment in exploration, mining, and recycling of critical raw materials, the head of an EU-funded agency for key minerals said on Wednesday. The bloc has set 2030 targets for 34 minerals such as lithium and copper required for its green transition to meet 10% of its annual needs from mining and 25% from recycling, and process 40% of its consumption in Europe. It also specified that a single third country should not supply more than 65% of a given mineral. For many minerals, the EU's reliance on China surpasses this amount. Bernard Schaefer, CEO of EIT Raw Materials, said the bloc needed to set aside money in its next 7-year budget from 2028 to promote mining and recycling. Quote, it should probably start with at least €1 billion or €2 billion and have the potential to grow considerably, end quote, he told Reuters in an interview. Scrolling down, he continues, quote, the Americans are very much hands-on in getting things down the road. It should be a wake-up call for Europe to act now, end quote. He also said EU countries' plans for increased defense spending, not considered when the EU set its raw material targets, meant Europe would need even more minerals such as vanadium, titanium, molybdenum, and chromium. Quote, the volumes are not huge, but there is greater sensitivity in terms of sourcing and the sense of urgency in superseding that for energy or mobility raw materials, end quote. Final story, Li-Cycle files for bankruptcy protection in Canada. This is Reuters via mining.com. Toronto-based lithium battery recycling firm Li-Cycle said on Wednesday that it has filed for bankruptcy protection in Canada and expects to start a formal sale for its business or assets. The firm's U.S. units have also commenced proceedings in the U.S. Bankruptcy Court for the Southern District of New York. Li-Cycle has entered into a $10.5 million debtor-in-possession financing and a stalking horse credit bid for at least $40 million with London-listed Glencore, its largest secured creditor. So lithium struggling, as we'll see in metal prices, it is below $9 now a kilogram. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a look at the bond market, where there has been some drama, as many of you will know, where yields rose fairly substantially on the downgrade by Moody's of the U.S. credit ratings. So that created some action here. So let's see what happened on the week. The U.S. 10-year bond is unchanged at 4.45%. So that is from a week ago. I believe it was on Monday. We saw it as high as 4.55%. And yields have come in. So we could call it a volatile bond market right now. The UK 10-year gilt is yielding 4.67%. That is up 0.01%. So not much change on the week. The Italy 10-year bond is lower, yielding 3.62%. That is down 0.09% on the week. The German 10-year Bund is yielding 2.57%. That is 0.1% lower than last week. So perhaps there's some demand for European bonds after that. And the Japanese 10-year bond yield is yielding 1.52%. That is 0.08% higher on the week and once again past the 1.5% mark. So interesting developments in the bond market. Week on week, not much change, but a lot of volatility and some drama in between. Turning to precious metals, gold is trading at $3,213.70 per ounce. That is down $44 on the week. Silver is trading at $32.35 per ounce. That is down 98 cents on the week. Platinum is trading at $1,000.20 per ounce. That is $25 higher than last week. And palladium is trading at $970.50 per ounce. That is $35 higher on the week. Turning to industrial metals, copper is trading at $4.62 per pound. That is 6 cents higher than last week. Iron ore is trading at $100 even. That is $1.45 higher than last week. Aluminum edges lower at $1.11 per pound. That is a penny lower than last week. Lead also edges lower at 89 cents per pound. That is also a penny lower than last week. Nickel is trading at $7.04 per pound. That is 2 cents lower on the week. And tin is higher at $14.89 per pound. That is 43 cents higher than last week. Cobalt is unchanged at $15.29 per pound. Lithium continues to fall at $8.83 per kilogram. That is 14 cents lower than last week. Uranium is slightly higher at $71.60 per pound. That is $1.35 higher than last week. And zinc edges lower at $1.21 per pound. That is a penny lower than last week. Zooming out, gold and silver lower, platinum and palladium higher. Industrial metals edge sideways with lithium continuing to drop. And those are your metal prices. Coming up, I'm very pleased to welcome back to the Northern Miner Podcast, Gerard Barron, Chief Executive Officer of the Metals Company, also known as TMC. Gerard has been all over the news in the last couple of years in regard to deep sea mining, so I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast after 5 years, Gerard Barron, Chairman and CEO of the Metals Company. Gerard, welcome to the show.
Great to be back here with you today.
I was joking with myself before we started, Gerard. I talked to you before it was cool, before all this deep sea mining became a huge thing. And as I was mentioning to you before we started the podcast, the first story I ever wrote for the Northern Miner of the few that I did was actually on Nautilus, which I believe was a previous iteration of the company. So all to say, you've been in the news a lot. Deep sea mining has become one of the major themes, in the mining news narrative. How are things going? What is life like for Gerard Barron these days?
Well, I'm happy to say life for Gerard Barron is a lot better. It's been a long journey since 2011, and it was all going swimmingly well, and then, it became apparent that the permitting pathway we were heading down with the international organization known as the International Seabed Authority had been overtaken by heavy NGO influence. And so, then we started to look at the alternatives, and we always knew the USA permitting alternative was available and real. But it really was when President Trump was elected that we decided, this is a 100% go now. So it was further helped by the cabinet that he chose, because many of those cabinet members we knew very well in opposition, and they had written letters, they had supported bills to support bringing nodules to the USA for processing and further refinement. So look, all of the stars seem to be aligning right at the moment, Adrian. And so, we can see a pathway through to production, because over the last 5 years in particular, since you and I last spoke, we have continued to invest hundreds of millions of dollars to better understand the environmental impacts. And of course, all of those results are now coming home. And the results are just so compelling. They're so convincing that this is the best way to be securing the critical minerals that we're going to need billions of tons more of into the next decades.
I'm glad you brought that up, because that was one of the big questions I've had since we've last talked. Because I remembered when we talked in, I believe it was 2020, the way it was described to me and my sort of overall impression was that this thing is, and maybe you would still feel this way or feel free to qualify it however you want, but that was basically harmless. It was the equivalent of, picking up rocks on the beach, but on the seafloor. And I imagine this little kind of tweezer-like machine kind of driving around, picking up a nodule. And then I saw the 60 Minutes report about a year ago, and I saw what kind of I've been calling an industrial strength vacuum cleaner type looking machine, looking like it's sifting up the top layer of the seafloor. And so I'm curious from your perspective, am I characterizing it wrong? In a sense, why isn't there, just picking up little nodules off the floor? Are you concerned about this disruption, since you bring up the environment, on the seafloor by what seems like kind of a vacuum cleaner type situation? But feel free to correct me if I am mischaracterizing it.
No, I'm not concerned. And let me explain why. If we go back to first principles, we know that we're going to need billions of tons more of metals. So we can't get away from that fact. So the question is, where can we secure a future supply with the lightest planetary and human impact? And that was really what drove us. That was part of our mission that we published, our purpose that we published in 2017, where can we secure these critical minerals with the lightest impacts? And of course, if we were to look at a bar chart today, and on that bar chart was a representation of every ecosystem on the planet, measured by the amount of biomass and biodiversity. On the far right-hand side, you would have tropical rainforest. And if you think about our resource, polymetallic nodules, so they're full of nickel and copper and cobalt and manganese, but about 45% of the revenue comes from nickel. And if you look at where 100% of the growth in nickel has come from in the last, call it 5 years, it's come from rainforest nickel. Now, the problem with that is that to get access to it, you have to remove the rainforest and everything that lives in it, including indigenous communities, of course, all of that beautiful biodiversity, just to get to the metal-bearing ore. If you were to look in the left-hand side of that chart, you'd see the area with the least biomass is polar ice. There's nothing living in polar ice. However, right next to it is the abyssal zone, the abyssal plains and hills. Almost 50% of the planet we live on is categorized as the abyssal area. There's no plants there, of course. We're talking, in our case, 4,200 meters below sea level. We measure the amount of biomass in grams per square meter, and most of that is bacteria living in the sediment. And so it begins with that first principle thinking, let's impact an area with the least living life. And of course, there's no alternative use for the abyssal plain. There's no chance of growing crops there. There's no chance of people living there. And so it's the perfect place to put a very large, abundant resource. And so when it comes to impact, you need to think this is a bulk commodity. I mean, we've identified 1.6 billion tons. We report to the 43101 and the SK 1300 resource reporting standard of inferred, indicated, and measured. We announced that we've made a claim under the US regulator for what we think is another 500 million tons. So we're talking more than 2 billion tons of identified and potential nodule resource. So it's a bulk commodity. And our job is to pick it up with the lightest impact and the greatest efficiency. And so, in 2022, we ran a commercial collector test. It was part of our permitting program. And that robot you talked about was lowered to the seafloor. One of the challenges was keeping it on the seafloor. And, it's interesting what a difference a number of decades make, because in 1979, they ran collector trials on the same resource, but they used an Archimedes screw drive system to propel the machine. And it made impressions up to 80 centimeters into the seafloor, whereas our collector made impressions of about 3 centimeters into the seafloor. And so obviously technology means that the whole process becomes much more efficient. And we're fortunate that the nodules literally lay on the seafloor. We don't have to dig to find them. It's a two-dimensional resource, which of course makes it easy to identify the resource and to quantify it, but it also makes it a whole lot easier in the collection. And, of course, now all the results are coming out about what those impacts will be. Along with our collector system, we had another boat out there, mainly filled with scientists in 2022, where we were monitoring the impacts during and stayed behind and surveyed the area afterwards as well. And then a year later returned to the area to see how recovery was going. And recovery is, very, very encouraging. And so far, all of the environmental pointers suggest that this is absolutely what we should be doing, and that the impacts will be a fraction compared to what even we thought they might be. And the recovery rates are much faster than everyone thought it would be as well.
Okay, excellent. So ultimately, if I understand you right, you're not saying there's no environmental impact, but you are saying on a relative basis, compared to land mining, this is what we might call a preferable environmental situation, shall we say, over, say, land mining.
Indeed.
Do I have that right?
Yes, you do. Yeah. There's no such thing as zero impact, right? Everything has an impact. The question is, what are our impacts and how do we compare them to the known set of impacts through current activity? And then which one do we want?
So just finally on this, so I guess part of the concern that I had was, I mean, do you have the concern of there being kind of this, what kind of looks like a raising, so to speak, of the seafloor? I mean, maybe that's overstating it. I mean, it was the image on 60 Minutes that really made me wonder, is this environmental, was the question I started to ask myself. I mean, so when you see those images, obviously you're very familiar and you've done studies. I mean, what is your sense of that process? And do you think it can be done better or with less impact, say by picking them up? Or is that just not a efficient business proposition? Maybe the technology isn't really there for that. Do you have any concern there?
Well, firstly, I think the images you're referring to on the 60 Minutes were dating back to the 1970s and also from the Discal experiment, where they tried to make the biggest impact they could to the seafloor. And of course, what they said is, boy, we return there years later and you can still see the impact. Of course, it's like saying, if I drive my four-wheel drive down the Atacama Desert, I'll make a set of tracks. And if I return there in 10 or 20 years, it's likely they'll still be there. And the same about the seafloor. What we need to look at is what happens to the biodiversity. How does that recover? Does that return? Now, of course, the nodules don't return, but, it's an extractive industry, Adrian. And so I have absolute confidence that our set of impacts and the fast recovery rates that we have observed, and when I say we, if you look at our environmental research program, we engaged more than 20 of the world's leading ocean scientific research institutions and organizations. So they're free to publish their results. We fund them, but all of the work funnels into a work program that we manage. And that is led by our Dr. Michael Clark. He has a large team of PhDs, brilliant scientists underneath, and the Natural History Museum or the National Oceanography Center or University of Hawaii. In Australia, it's the CSIRO, the National Science Lab. So, they do this independent work and they feed us the results. And so no one can question the quality of that. And I think, it's about recovery rates. And I think that it's a bulk commodity. And, we don't need to be picking up a couple of nodules. What we need to be doing is, getting to a commercial scale. So you've got to ask, what problem are you trying to solve for? And in our case, what we've measured is that using our commercial collector system, the impacts are small. They're confined to the area of impact as well. And the recovery rates are fast. And, for example, in the case of our tracks, when we revisited 1 year later, like literally 12 months later, we saw that Formiminifera in the tracks recovered to 30% of pre-disturbance levels and 50% of diversity in the tracks. And so, these are really quite outstanding results. Megafauna identified 2 weeks after the test mining were found present and alive and thriving in areas most affected by the sediment plume, which is like within, centimeters away from where the collector went through 12 months later. So, the results are very encouraging. And I think people have this notion that, the seafloor, the oceans are this untouched paradise. And, what I can tell you is that there's a lot of activity that goes on the ocean floor. In fact, if you look where our license area and you go about 500 miles east, you'll see a very active hydrothermal vent system at about 2,000 meters below sea level that, I don't know whether it's the actual age of it, but decades has been spewing out the most poisonous sulfur-rich gases into the ocean. And, the ocean has this way of healing. And I think that, our impact, of course, is very small. We're picking up rocks, Just imagine to your listeners a golf driving range filled with golf balls, and our job is to go and pick up those balls with the most efficiency and the lightest impact. So that's what we're doing.
Okay, excellent. So when the International Seabed Authority, when they're slow to put regulations out, in a sense, like what you say, it sounds quite benign. So why do you think they're so slow to put out some kind of regulation, which I believe they're supposed to have this already completed, right? And they're behind schedule. There's a lot of controversy in a sense still, and you see it a lot in the news media. I'm sure you see the articles, right? So what do you think the concern is from the ISA's point of view?
Well, unfortunately, the ISA was set up in 1994. the organization, to put in place exploration and exploitation regulations to allow the development of this industry. And so they did a good job on exploration. They came into being in 2001, and they started working on the exploitation regs in 2012. And here we are, 2025, and still no regulations. And there's one simple reason, and that is some countries were heavily influenced by the NGO community. And what we're seeing is the heavy hand of that influence being used to slow down the regulations. And so, that's a very unfortunate event because, talk about unintended consequences. This is a perfect example. And those NGOs, the reason why they want to slow it down is generally they don't believe we need any new extractive industries. And they have a view that we can recycle our way to a better future, or that changing technology will be able to mean we don't need these metals. But, it's just nonsense, unfortunately, because if you listen to anyone who knows anything about future metal demand, whether it's the World Bank, the International Energy Agency, Benchmark Mineral Intelligence, or Goldman Sachs, they'll all tell you that we need to secure billions of tons more of these metals for several reasons. One of them is the transition away from fossil fuels, which has slowed down a little bit, but don't worry, it's still happening. The ongoing industrialization of the developing world and meeting the needs of population growth. And then you add on top of it things like AI, which has put even more demand on energy systems. So there's no doubt about it that we need more of these metals. Unfortunately, though, in the last 5 years since you and I last spoke, some of these governments have fallen victim to the heavy influence of some of these environmental groups, and it's meant that they've just tried to slow things down. And so for ourselves as a contractor, we secured our first area in 2011, and our sponsor country, Nauru and Tonga, they've been severely let down by the system. And so we're just very fortunate that there's an alternative to that system. And of course, in recent months, you've heard a lot about it. It's called making the application through the United States, through NOAA, through the regulations that they put into place in 1980.
Okay, excellent. And that is where I wanted to go. Just a final question, just a small one, briefly, if possible, just on the environmental. Do you think it should be limited, though, however? Like, let's say the ISA does put regulation together, or even just people start following the US regulation, or people start going. I mean, do you think there should be some limitation? Should it be a free-for-all where all of a sudden every country off their coast is doing whatever seems like responsible to them? But do you think there should be limits on it? Or do you think it, in a sense, should be, more or less open for countries to decide on their own terms?
Look, I think there should be limits, but I also want to respect, sovereign countries have the right to decide what's in the best interests of their economies and their people. And the beauty of the United States is that the regulations that they put in place in 1980 were very thoughtful, were very thorough, including public consultations, and realistic to enable us to operate within them. Now, the other thing is that we're talking about a very tiny patch of our ocean. So, for example, today, we know the oceans are about 360 million square kilometers in size. The CCZ in total is about 4 million square kilometers. So it's very condensed. And if you look at other parts of the ocean, including territorial waters, there just are not minerals there. So these minerals tend to form in very concentrated areas. And while there are nodules in other parts of the ocean, the CCZ is the area of greatest interest. And that's primarily because they're rich in nickel and copper. And that's thanks to the geology further east in the Rockies and Andes. They were covered in these metals, which eroded into the Pacific Ocean, plus some of these metals that came up through the core of the Earth. And so you had currents from the north and south off the coast of the USA, and they met in this area and headed west, and that's where the CCZ is located. So we're not talking about a free-for-all in the oceans. We're not talking about large areas. We're talking about a very concentrated area, in our case, known as the Clarion-Clipperton Zone. And, that's great. As I said earlier, there's no alternative use for this patch. And that's one of the big challenges with land-based mining. You go after the most obvious resource early on land, but as time goes on, you go into the harder to access resource areas and the lower grade. And, unfortunately, on the case of land-based mining, it means tropical rainforests. And that's something that we think we can have a direct impact on slowing down.
And I think this is actually quite an important point. Like, I think part of the fear, if I was to speculate here, is I think the fear is that there is going to be a free for all. But to your point, I think this is a very important point. We're talking about a very small area. And so, yes, there's going to be an environmental cost. We think it's going to be minimal. And it's, to your point, a very small area in the context of the larger ocean, at least currently, in terms of the high grade stuff, as you kind of point out. So I think that's an important point. Now, in terms of this, what I perceive as a dilemma, I'd be curious to see what you have to say about it. So let's say the ISA is still working on their regulation. It hasn't been solved. And then you have Donald Trump in the USA saying, here's an executive order, go for it. How do you sort that out in terms of how do you figure out who to listen to? I mean, one, as far as I understand, the ISA isn't that international law. And the other is, the United States and their sovereign territory, let's say. Is the CCZ, is that in United States territory?
Well, this is a really important point. And no one has sovereignty over the oceans. No one. And every nation does have freedom of the seas, though. And so you have freedom both based on the minerals on the seafloor, you have freedom of navigation and freedom when it comes to laying cables. What happened in 1982 were a number of countries came together and signed UNCLOS, signed a treaty that basically said, when it comes to the minerals that are on the seafloor, this is how we're going to handle it. And today there's 169 member countries. But there's one country that is not a member of it. In fact, there are more than 20 countries, of course, who are not. But the most notable absentee is the United States. So when the International Seabed Authority talk about the fact that they have the exclusive mandate, firstly, they do not have the exclusive mandate when it comes to the United States. They do have the exclusive mandate for the member countries that signed the treaty. But that does not include the United States. So that's very clear. And the US have been a consistent objector to that treaty. And so when it comes to the rule of law, we are 100% confident that we're in a very good position there. And that has been reconfirmed by the Commerce Department in the US. Now, there's no dilemma going to the earlier part of your question, because we announced at our earnings call this week that we will not be submitting an application to the International Seabed Authority on June 27. What we announced is some weeks ago is that we have made application to NOAA over areas for both exploration and for a commercial recovery permit. But the ISA, I believe, will continue to finalize those regulations, and I certainly hope they get them finalized, because there are many other contracts out there that want to see themselves move into production. We know that China are the largest leaseholder when it comes to international waters through the International Seabed Authority, and we know that they want to move into commercial production. So I'm sure China and other sensible voices around the table will encourage the International Seabed Authority to get those rules agreed, and we'll see them out there.
It's quite an interesting issue, isn't it? It's kind of like the moon to a certain degree, So to clarify then, so the CCZ, this Clarion-Clipperton Zone, this is in the, I believe we call it the high seas, right, where it goes outside of the sovereignty of any country.
Yes.
Okay, excellent. Now, as far as the executive order, I don't have it in front of me here, but China took issue with this sort of extra national claim that President Trump was making. It sounded like President Trump was saying it's okay to go beyond the sovereignty of the United States. And it seemed to me, if I understood the story correctly, that China took issue with that and said, this is basically, to summarize, inappropriate, so to speak. How do you feel about my characterization of things? Like, do you think it's more or less accurate the way I'm describing things, or would you portray it another way?
No, no, it's not accurate because, and it's not my view, it's the view of, legal experts who have opined on this topic. And, when it comes to China, they made their bet. They joined the treaty. They signed UNCLOS. So when it comes to international waters, they agreed via UNCLOS that when it comes to minerals, that they would work through this regime. The United States did not, never did, and had been a consistent objector to that treaty ever since it was put in place in 1982. So it's as simple as that. And, China may wish that America were part of the treaty, but they're not. It's as simple as that. And so I encourage you to read some of the statements, your listeners to look at some of the statements that we published in our last earnings report. In fact, there's been a lot published on this topic, but you can go to our website to find, some of those legal reviews and legal commentary. But at the moment, there's just a bit of, shoulder bumping going on. But from our position, there's a very clear pathway. Of course, we saw the United States government by the Commerce Department come out with a very clear position on this as well, which is very consistent with how I've described it. And so, I think what the member countries of the International Seabed Authority and the signatory countries to UNCLOS should do is focus their attention on getting those rules agreed so they can join us out in the CCZ and we pick up these metals and stop impacting some of the terrestrial areas that have been devastated through some of those mining practices.
Thank you for answering those questions. So just finally, then, if we could turn to the metals company, in a sense, where do things stand with the company right now? So it sounds like you have, communications with the government. I believe you testified in Congress. How are things going? It seems like you're getting a lot of news stories. Tell us about the company, kind of what's going on, what's top of mind.
Well, things inside the company are great. I won't say it's been an easy road since I spoke to you 5 years ago, Adrian, but what I can tell you is that, we continue to be an amazingly tight team, all focused on the mission, which we signed up for, now encouraged by the permitting opportunity with the United States. We announced during the week, we took in $37 million from some very important shareholders who I believe are going to have a positive impact as we continue to grow the business. We got through some dark days when our share price was much lower. The key shareholders all rallied and agreed to lend the company money during those times. And of course, when the shares were trading at 70 and 80 cents, the shareholders were lending money so we could repay it because we've just issued shares at $3. And so focus on protecting shareholder equity has been one of my highest priorities, along with keeping the team together so we could be ready when this moment arrived. So at the moment, we feel encouraged. We can see the permitting pathway unfolding before us. And the focus now is very much to get the business into commercial production. We've had a lot of people, a lot of strategics that we've spoken to over the last 5 years. And some of those talks got very advanced. The stumbling block was always the permitting uncertainty that came through the international regulatory environment. So now with the US certainty, with that issue now dealt with, we've got a lot of people at the table and we're encouraged by, the talks we're having. We won't be rushing into anything. The thing is we want to make sure that we've got the right people helping us develop this opportunity in the best possible way. So expect a strong flow of news coming from the metals company over, the coming year.
Right. Like in a sense, with this executive order, and it's fairly recent, in a sense, is there anything stopping you from starting? In a sense, like I suppose now you feel you have a regulatory framework that you can go with, so to speak. And so, do you have all your ducks in a row? Like, are you ready to begin? Like, do you have the machinery you need? Is it ready to go? Or is it still, let's say, a couple of years of preparation and getting things kind of worked out?
Well, we have our production vessel, the Hidden Gem. We've announced that we're working with Pacific Metals up in Japan on the processing side. And of course, the US regs require us to have a plan to process in the United States. So we'll work towards that as well. But the main thing we're going to be waiting on is the permit to do that. And so for people that think that the US pathway is a way of getting around any environmental regulations, they're wrong. The US, through their rules in NOAA, known as DSHMRA, have a very exacting set of regulations that we will have to pass. Now, what the executive order did was say we're going to fast track that process. And so, what might have taken a year or 2 years, we're confident that we can get done in a faster time frame. But that will be the decision of the regulator. That's out of our hands. But all of the stars point to the fact that all of the stars are coming together right now. I must say it's an exciting time. And of course, we've been at this since 2011. We've spent about $600 million so far, much of it on environmental research. And so, we have an environmental impact study that addresses the concerns that any regulator is going to want to raise. The beauty about NOAA, who will be managing this, is that they carried out a programmatic environmental research, environmental impact study back in the 1980s. They submitted it to Congress in 1995. So there's been a lot of environmental research. And sometimes I hear people say we don't know enough about the impacts, but that is also wrong. We know an enormous amount about this part of the ocean. We know a lot about what the impacts of picking up these rocks will be. We know it from the studies done in the 70s and 80s and presented to Congress in 1995. And then our own company has been busy studying that same things since 2011. And of course, many other contractors have been contributing to those studies as well. So we know a lot about this part of the seafloor. And, that's what gives us confidence that this is the right thing to be doing.
Okay, excellent. And final question, since you mentioned the concerns, and I want to give you a chance just for final thoughts here, but there is the dark oxygen thing, which always seemed, I have to say, it always felt a little spurious, but maybe there's something there. Could you address the dark oxygen thing? And, because you mentioned, there's a sense that we don't know, but the metals company would say, well, actually, we've done a lot of research. So if you talk a little bit about the dark oxygen debate and any final thoughts you might have, that would be great.
Dark oxygen is pure nonsense. It was a campaign funded by us. We put in a rebuttal to the Nature Geosciences because we and many other experts who work in this area picked out a number of flaws in the methodology. And for whatever reason, I'm sure it was an effort to get more research dollars. And of course, the media jumped on it because a lot of NGOs kind of fueled it, if you like. And so not only we, but also many other parties looked at it and shook their head, to be honest. And so not much more to say about that. But from an environmental perspective, dozens of research papers and studies had never been able to produce these results. Yet miraculously, this particular scientist, who we were funding at the time, managed to. It was quite funny because one of his postdoc students actually went on a podcast and was talking about how exciting it was because it was her first time at sea and first time using this equipment. And she read the instructions at least twice on how to use this equipment. Now, when you talk to people who work in this industry and who use these landers on the seafloor, have done for decades, they're like, these are very, very technical pieces of equipment. And honestly, it does surprise me how much oxygen this story has received.
Any final thoughts you want listeners to know about deep sea mining and what's happening out there?
My only thoughts are it's an exciting new frontier. 70% of our planet is ocean, yet today we don't get metals from our ocean. We're pushing into the most biodiverse, rich ecosystems known as our tropical rainforests. The ocean is the right place when it comes to polymetallic nodules to be getting nickel, copper, cobalt, and manganese. And the metals company is the way to get exposure to this new industry. We've announced that we've made application with a resource that will be 1.6 billion tons of defined resource, speculatively another 500 million tons on top of that. And we have a permitting pathway now through the US government to get ourselves into production. And so this is the beginning of a very big wave. I welcome shareholders who'd like to come and join us on this very exciting journey.
Gerard Barron, Chairman and CEO of TMC, the metals company. Thank you for joining us and sharing your perspective and insights on this week's Northern Miner podcast. And let's not wait 5 years for the next interview.
Likewise. Thanks, Adrian.
Thank you once again to First Mining Gold for sponsoring this week's episode of the Northern Miner podcast. If you want to learn more, visit firstmininggold.com. And thank you again to Gerard Barron for appearing on this week's podcast. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.